Well, here in Spain, for those listeners who missed last week, we've added two new Blevins Franks advisors to our weekly discussions. From now on, Cathal Rochford and Paul Montague will rotate with our regulars Brett Hanson and Chris McCann. We started last week with Paul Montague. It's Cathal Rochford's turn. Last week, Paul looked at the common financial planning mistakes he comes across in Spain. But we didn't have time to look at pensions. So Cathal and I will do that today. But first, let's learn more about Cathal. Welcome to our weekly discussions, Cathal. Let's start by learning more about you and your background and experience. What did you do before you joined Blevins Franks?
Yeah, so good to be with you today, Howard. So I'm from Ireland. I grew up in Dublin. I studied at Trinity College Dublin, where I received my bachelor's and master's degree in business and finance. I've also completed several professional qualifications in investment and financial advice, more related to my day job. I spent over 10 years in the wealth management and financial advice industry, primarily looking after families and private clients with their financial planning and estate planning. And so I've worked for both London and Dublin-based firms throughout my career prior to moving across to Spain.
When did you join Blevins Franks and move to Spain? And what have you been doing with Blevins Franks since you joined?
Firstly, my wife is Spanish, so she has family across the south of Spain. So we spent a lot of time travelling around Spain and visiting various places and family here. So we moved across in 2016. We actually got married in the south of Spain, and we combined the wedding with the move across here. So I joined Blevins Franks shortly after that. And so initially I joined our office in the Alicante and Valencia area. So we have two offices in that region. And my role was as a private client manager. So I was looking after existing clients of Blevins Franks across Andalusia, Murcia and Valencia. So it was in relation to their ongoing financial planning, tax, pensions and everything like that. So it really was making sure that everything's in the right place and everything's well planned for their future here in Spain. And then in 2019, I was promoted to become a partner with Blevins Franks, with responsibility of the Balearic region. So here I'm part of the local team in Mallorca, where we've had an office for over 25 years. And so my role here is really in relation to advising new people who are looking to move across from the UK to Spain or Mallorca. And it relates to giving them advice, integrated advice covering both the UK and Spain, in terms of how to structure themselves to minimize Spanish tax and to seamlessly advise from when they leave the UK and taking advantage of certain opportunities in the UK to when they move here to Spain. So it's really about simplifying their financial planning and tax needs and aligning their financial planning with their lifestyle preference really, and making the process as tax efficient and seamless as possible.
So are pensions a key consideration for most of your clients?
Yes, pension planning is a core part of the advice and planning we do for our clients. So, a pension can be a very sizable part of one's estate. So it's very, very important to get right. So when we look at pensions, I mean, most of our clients are moving from the UK to Europe. So I'll focus on UK pensions. So there are various types of pensions. The most common pensions people will be familiar with is the likes of a state pension, which is paid by the government. So in the UK, if you've worked between 10 and 35 years and you've made national insurance contributions, you'll be entitled to some form of state pension. The full state pension is just under £10,000. So when you get to the retirement age, which is currently 66, you're entitled to receive that. So it's a very valuable pension to have. And there are other forms of pensions as well. Another one is the final salary pension, which is the traditional company pension in the UK. So these pensions are very, very valuable. So they pay you a guaranteed pension for life, usually from the age of 55 onwards. And it depends on the amount of years you worked for the company and also your final salary when you were there. So these pensions, they're guaranteed. They generally rise with inflation, and part of it can be then passed down to your spouse after your lifetime. So if you have these type of pensions, they're definitely a very good asset to hold. Nowadays, however, they're becoming more of a rarity because they're quite expensive to run. So what generally happens nowadays is that the amount of capital that people are taking from a pension, given that people are living a lot longer, is more than what had been initially allocated to the pension. So they're very expensive to run, and again, a lot of these pensions are being wound up and they're less common nowadays. So the other form of pension, which is far more common for people setting up pensions now and even people moving to Spain, is called a defined contribution or a money purchase pension. So these pensions, you contribute into these pensions throughout your working career. Your employer will likely contribute into them as well. So the funds you add into your pension from a young age have the chance to grow very tax efficiently throughout your career. So there are various benefits to a pension like this. Firstly, when you contribute into a defined contribution pension, you receive income tax relief with the income that you put into the pension. So it reduces your income tax in the year when you contribute. Also, the capital in the pension grows very tax efficiently into the future because there's no capital gains or income tax on a pension asset. So when you combine the fact that it's very tax efficient, it has a very long-term investment time horizon because many people will hold on to a pension for decades. And as well, when you have professional trustees or advisors overseeing the pension, it proves to be a very, very powerful asset to hold when you get to retirement age. And that compounding growth over many years can grow into a very sizable pension when you get to retirement. As Einstein said, that compound interest is the eighth wonder of the world. So, getting your pension right from a young age can be very, very advantageous when you get to retirement.
So let's look at the tax issues now. If someone's receiving income from a UK pension and living in Spain, do they pay income tax in the UK or here in Spain?
Yes, so if you have, it depends on the pension. If you have a government service pension, it'll remain taxable in the UK. But that's as part of the double tax treaty, that's quite rare. Mostly UK pensions, including the state pension, can be paid to you gross from the UK. So you can get what's called an NT code. So if you can demonstrate that you're a tax resident in Spain, UK pensions can be paid to you gross, and then you would declare the income in Spain. Whether you are in the UK and you receive income from a pension or in Spain, the income is taxable at the general rates of income tax. So in the UK, the rates are between 20 and 45%. Here in Mallorca, the rates range between 19 to 49%. So overall, depending on the country where you live, that's the country where you will be paying income tax on your pension.
And what about the pension lump sums?
Yeah, good question. So with a pension lump sum, in the UK, you can draw 25% of your pension when you get to retirement age, and this is tax-free generally. It's called the pension commencement lump sum. So if you live in the UK, it's a very good option because you can draw out 25% of the pension and you can enjoy the benefits of that money early in retirement when you may wish to travel or indeed move country. However, in Spain, if you've already moved here and you became a tax resident in Spain, the 25% tax-free lump sum is not tax-free. So it can be a bit of a pitfall when people move here, they formalise their residency, and if they then decide to draw down 25% of their pension, they can do so, but it's not tax-free. So I think taking specific advice here in Spain in terms of how the income tax will work when you draw from your pension is very, very important.
Yeah. Beside income tax, Spain also applies an annual wealth tax on its wealthier residents. Are UK pensions liable for this tax or not?
Yes, so UK pensions before 2019 were exempt from Spanish wealth tax, but there was a DGT or a Spanish binding tax ruling in 2019 which meant that non-EU pensions will be subject to Spanish wealth tax. So it was a bit of a change, and it means that a UK pension, if you're drawing from it, if you've got to the pension age where you can access it, needs to be included in your wealth tax. So it can increase your marginal wealth tax rate here in Spain. However, if you move your pension to an EU equivalent pension structure, then you can actually have it exempt from Spanish wealth tax. So depending on the advice you take and how you structure your pension can make a difference in terms of whether it's included in your wealth tax rate or not.
What about qualified recognised overseas pension schemes, or QUROPs as they're commonly called? How are they taxed in Spain?
A QROPS is an overseas pension scheme created to receive monies from UK pensions when the owner has moved abroad. To be able to receive the monies from a UK pension, the QROPS must be recognised by the HMRC. A QROPS can provide various benefits depending on your situation and objectives, and it has been a popular option with British expatriates in Spain. To touch on some of the advantages of a QROPS, a QROPS being based in the EU is exempt from Spanish wealth tax, whereas UK pensions are not, and this can considerably reduce one's annual wealth tax liability. Another advantage is that once the pension has been transferred out of the UK, the QROPS is no longer subject to UK lifetime allowance penalties. These penalties become applicable once an individual's total pension size grows above £1.07 million. The penalties range from between 25 to 55% on the excess growth above this level, depending on whether the person takes income or a lump sum from the pension. Therefore, a QROPS can facilitate unrestricted growth into retirement for their pension. Finally, the QROPS offers greater currency flexibility, and income can be taken in both sterling and euro, which can simplify matters when living in Spain or the Eurozone. However, the situation has changed with respect to QROPS recently. Towards the end of 2021, the Spanish Tax Office, or DGT, issued a binding ruling which determines that unless a pension is either a Spanish pension contract or an EU pension, a pension transfer from a third country to an EEA pension scheme will be subject to a personal income tax charge, and this is on the whole fund value. This means that if a Spanish tax resident transfers a UK pension into a QROPS, even if the QROPS is in an EU country, they will be hit with this tax charge. If you've not yet moved to Spain and remain a UK resident, you could transfer your pension to a QROPS before you leave the UK to avoid this tax charge. The key really is to complete the transfer prior to becoming a Spanish tax resident. However, if you've already moved to Spain, there are various other pension options to consider, which are fully suitable for Spanish residents. This tax change, as well as the change regarding wealth tax, which I touched upon in my previous point, emphasises the importance of taking specialist advice that's up to date and personalised before making any financial decisions on your pensions. I think the bottom line really is that pensions, it's an area that can be very complex, and it's best to seek expert advice on. We all like doing a bit of DIY from time to time, but not if it could adversely affect your hard-earned wealth.
Well, are there any common pension planning mistakes you come across in Spain that you think people should be aware of?
Yes, one that I touched upon already is the tax-free lump sum from a pension. I have come across situations where people have drawn down the 25% lump sum from a pension, and they believe that they could do so based on living in the UK before and their knowledge of the UK tax system. But this can be costly, because if you drew down 25% of a pension whilst you're living in Spain, the full amount is subject to income tax at the marginal rate of tax. And this can be as high as 49%. So that can be a major pitfall when you're drawing from a pension. Another common planning opportunity, the way I would see it, would be that when you move to Spain, it's important to retain continuity of advice and service on your pension. Since Brexit happened, passporting of financial services has ended between the UK and Spain, so it's no longer possible to retain your existing UK advisor or even somebody looking after your pension from the UK here in Spain. So it means your pension is essentially left behind. It's quite difficult to take actions and have active management on your pension if you're living in Europe while your pension is in the UK. So I think ensuring that you can have continuity of advice and service whilst you're living here is very, very important. At Blevins Franks, we're regulated both in Europe and the UK. So our clients who have a UK pension, we can ensure that they receive ongoing advice, service and management whilst they're living here in Spain. So it's a very seamless transition. Whereas in some cases, people are living here and it's proven to be problematic when they need to draw down from their pension or take any action. So there are two common pension planning mistakes or areas of opportunity that people need to look at to make sure that they're doing the right things at the right time.
Well, changing the subject a little now, Cathal, is Blevins Franks holding seminars in Spain this spring?
Yes, we're holding a series of 10 seminars across Spain this spring. So our season kicks off in Denia and Benidorm on the 28th of February and 2nd of March. These are followed by Sotogrande, Marbella and Fungarola between the 7th and 9th of March, and in Almeria then on the 14th. So all of our seminars are open for booking, and you'll find details on our website, and if you'd like to register you can do so there. Later in March we'll be having another seminar in Almeria, one in Murcia, and then in April we'll be having a seminar in Tenerife and also here in Mallorca on the 26th of April. So our seminars provide an update into what's been going on with taxation, inheritance, UK pensions and the investment world overall. So we'll share our insights into steps you can take to protect yourself and your family, and really making the most of the opportunities available to you as an expatriate living here in Spain or indeed the EU.
Well, it's been a pleasure to talk to you for the first time, Cathal. Thank you very much indeed. And of course, the Brevins Franks website is a source of information, and you can make an appointment, find out who your local advisor is, and so on. Brevinsfranks.com.
Thank you very much, Howard.